Across global enterprises, a dangerous assumption has taken root. The belief is that complying with new e-invoicing mandates requires a simple format swap, trading a traditional PDF for an XML file. Treating this transition as a routine checkbox exercise is a critical miscalculation for enterprise architects. The issue is not the file format. The issue is velocity. Tax authorities no longer accept historical data compiled and submitted at the end of the month or quarter. They demand to see the transaction in their systems the exact second an invoice is issued. This immediate data requirement entirely bypasses the traditional timelines of back-office accounting teams. Businesses are used to driving while looking in the rearview mirror, reporting on the past. The new regulatory standard requires absolute transparency in the present moment. E-invoicing mandates force a total yield of real-time control over global enterprise workflows. Look at a map of active digital mandates. Latin America pioneered the model. Europe standardized it. Now the Middle East and Asia are adopting these frameworks. We are transitioning away from asynchronous tax models, moving to centralized digital infrastructure controlled by the government. Tax authorities are effectively inserting themselves directly into your daily operations. They operate as a silent partner in every transaction. They possess the capability to see your enterprise transactions at the exact same millisecond that your own systems do. Governments are building out high-speed, real-time tracking systems. If a global business attempts to interact with these systems using legacy timelines, they will encounter immediate operational blockades. To understand why governments are enforcing this strict data integration, we have to examine the underlying economic driver. This chart compares expected tax revenue against actual collections. The massive shortfall is the VAT gap, billions lost to evasion. Traditional audits cannot process digital commerce. A transaction happens day one, but reporting takes 30 days. This blind spot allows bad actors to manipulate records. Real-time digital oversight is the only mechanism fast enough to close that gap. For enterprises, this turns deep technological integration with the government into a non-negotiable requirement for doing business. The regulatory framework designed to enforce this real-time oversight is called Continuous Transaction Controls, or CTC. In legacy flow, data moves directly from seller ERP to customer. CTC breaks this connection. A tax authority node drops into the path as a clearance gate. The data routes to the government first, pausing for inspection. Once cleared, it completes its journey. This sequence transforms invoicing into a strictly regulated digital workflow monitored by the state. There is zero buffer time to reconcile spreadsheets manually or patch errors post-transaction. The data must be flawless upon generation. Under CTC architecture, an invoice leaving an ERP system with a single error is flagged and rejected by the government in seconds. Data quality becomes the ultimate operational bottleneck. Implementing this clearance architecture is difficult enough for a single country. Scaling it across a global footprint exposes a massive IT challenge. Multinational companies typically run massive, unified ERP environments, like SAP S/4HANA or Oracle, to centralize their global data. When businesses attempt to meet these global mandates using localized point solutions, the architecture looks like this. A central ERP node forced into a chaotic web, requiring custom integrations for every jurisdiction. Mandates like Italy's SDI, Poland's KSEF, and Saudi Arabia's ZATCA don't share a common language, utilizing entirely different technical standards. If any local government randomly alters its regulations, the bespoke connection breaks, requiring immediate custom IT intervention to repair the data flow. Managing dozens of these disconnected workflows carries immense financial and operational liability. It drains IT resources and introduces severe failure risks at every endpoint. A unified ERP cannot efficiently manage highly fragmented local compliance rules on its own. Forcing it to do so without a central strategy guarantees structural failure. The alternative to that fragmentation is building a centralized data highway. The structural solution replaces chaos with a single robust bridge connecting the central ERP to an intermediary real-time compliance or RTC platform. This layer ingests unified ERP data, automatically filtering and distributing it into the specific regulatory submissions required by each local jurisdiction. This workflow guarantees 100% accuracy. The data travels from the point of sale to the tax authority with zero human touch. The infrastructure simplifies global complexity because it treats varying, complex tax laws merely as technical parameters within the software itself. A scalable infrastructure layer automates global compliance, removing the friction of manual accounting. Because compliance now dictates data architecture, the conversation moves out of the tax department and straight to the executive level. For chief financial officers, this infrastructure controls cash flow and risk management. With real-time data flowing directly from government clearance portals, the CFO gains exact visibility into enterprise liabilities and receivables. The concept of a month-end surprise is entirely eliminated. For chief information officers, the mandate is maintaining flawless system integrity across the entire digital ecosystem. The stakes are absolute. If the API connecting the enterprise ERP to the government portal goes offline, the company loses the ability to issue legally valid invoices. Revenue generation stops immediately. Maintaining the integrity of the tax data pipeline is a mission-critical IT function that requires strategic oversight from enterprise leadership. For global operators, employing a wait-and-see strategy is a direct path to systemic failure. A failure in the asynchronous data flow dictates physical reality at the border. A single delayed clearance packet results in goods physically detained at customs checkpoints and payments frozen by international banks. However, organizations that treat digital compliance as a comprehensive modernization project gain a strict advantage over their peers. Once tax data is digitized, standardized, and flowing in real time, it becomes a strategic asset. You can leverage that data flow to optimize global supply chains and identify efficiencies that were previously hidden in legacy spreadsheets. In a real-time regulatory environment, your architecture dictates your outcome. You will either face constant supply chain blockades or you will achieve streamlined growth. Governments operate as technology companies now. To survive, your business must do the same.